righty, guys. First of all, we hit 50,000 subscribers, which is nuts. I can't thank you enough. I think it happened overnight. I went to bed at like 49,950, something like that. Woke up to over 50,000 subscribers, which again, it's unbelievable, but the work is obviously nowhere near done. I'm still planning on, making YouTube videos, obviously. We're coming to that 100,000 subscriber plaque. That's the next goal. And until then, guys, well, after that too, I'm not going to stop then either. But it's going to be, there's going to be a lot of content. Let's just say that, guys. And in this one, we're going to break down the stock market and some earnings that came out over the last couple of days. So guys, hit the like button, make sure to subscribe. Now we're on the road to 100K officially now that we just hit 50. So make sure to subscribe. We have a while to go, guys. And cheers. Let's get into it. So at this point, it's about 11:30 a.m. on the East Coast, and we have every index pretty nicely in the red. Not that I'm shorting, not that it's nice for me. I guess, on paper, we're losing money, but it's a decent day for the bears, right? We're dumping down. S&P's down about 0.75%. NASDAQ 100 is down about 0.5%. Dow's down 0.9%, and the Russell is down 1.3%. So we are taking a bit of a beatdown today. I know Powell, I was watching CNBC earlier. I didn't watch much of it, to be honest, but I know Powell was speaking earlier on, the economy, rates, where things are going. And yesterday, I'm pretty sure he was speaking as well. He was talking about how there are no rush to make a move on interest rates right now. Obviously, the stock market came into this year thinking we're going to get 3 rate cuts or something. It doesn't seem like we're going to now, get that many cuts. Who knows what's going to happen? So there is some uncertainty, in the air right now, as it seems like there always is, right? But with rates, man, that causes the market to go down in the short term. If, the market is uncertain about rates, where things are going, right? And obviously, in about a week or two, I think we'll rebound. The market will, ease up a little bit. But for now, we are down across the board. VIX is up 3%, and we have a wedge here on SPY still, guys. We're in this. We've been in this. And on QQQ, pretty much the same thing. If I zoom in a little bit here, you guys can see, boom, higher lows are being made, but also lower highs. You guys see this wedge that we're in. And on the Russell, it's not looking so pretty here, guys. Now we're officially dumping under the moving averages, which we were just above them about 2 weeks ago. Now we're falling right through that. Not the best sign, not ideal in the short term for the Russell. Obviously, it's not like it's a falling knife or it's in free fall mode yet, but it is dumping under the moving averages, which I am not a fan of. And the Dow really is the only one. I mean, not the only one. It looks a lot better than the Russell, though. Let's just say that. It's above both moving averages, unlike the Russell here, you guys see. And to be honest, man, this is in a wedge as well. You guys see that, similar to QQQ and SPY. So let me know your thoughts in the comments, guys, and let's just dive into some of these earnings. We got McDonald's on Monday. I forgot to mention or talk about it, and quite frankly, I was it was a long weekend. Let's just say that. Eagles Super Bowl. I was actually in the Pocono Mountains for the Super Bowl. With a bunch of people. We didn't get back till like Monday. Midday, Monday was pretty rough. I mean, after, Sunday's debacle, which I'm an Eagles fan. It was great. But, it got rowdy. It is what it is. So I missed a bunch of these earnings, man. I was recovering on Monday. Tuesday came around and I'm like, half asleep Tuesday, which was yesterday. Now I'm fully back at it. I'm feeling great. And we got to break this down. McDonald's reported, and we were in a wedge. We were for a good couple of months, and now we're breaking out again. And McDonald's, if you guys remember, you probably don't, but I'll remind you now, this is a stock that I bought back in this range right here. It must have been June, July, that period. I bought at 245, 250. I know that for sure. The exact date, I don't know that, but I also know I sold out on the big run up here. I literally bought it right before the run up, took the profit, boom, I think at like 310, something like that. It was a 25% move. And from that point, we timed it perfectly. I mean, it doesn't always work like that, but we timed it beautifully. It sold down all the way up until now. And now we're breaking out again after the company reported earnings. And shameless plug, guys, if you're interested in what I'm doing in the markets, my portfolio, that is on Patreon down below. Feel free to check it out. So McDonald's reported adjusted earnings per share of $2.83. That came in line with expectations on revenue of $6.38 billion versus $6.44 billion expected. So they missed on revenue slightly. EPS came in line, not bad. It must be guidance. Let me see here, guys. It's got to be guidance or some other metric here that came in. Yeah, Q4 global comparable sales up 0.4%. Looks like U.S. down 1.4%. TD Securities reiterates hold on McDonald's, maintains $300 price target. Positive same-store sales surprise, so that's definitely it, offsetting the profit loss or profit miss, excuse me. But either way, stock's breaking out. Momentum's clearly building up. If this thing pulls back here, because it is a little overbought in my opinion in the short term, if it pulls back, that potentially could open up an opportunity in the short term. So Shopify is another one that reported numbers. I'm pretty sure they came out yesterday. The stock's currently down about 3%. We're trading at $119 after hitting $125 just about yesterday, a day, 2 days ago. And clearly the uptrend is holding on Shopify, no doubt. So let's see quickly what they reported. Looks like a lot of price adjustments here from the analysts. So where the heck are their numbers, guys? Let's see here. Let's come down a little bit more. Okay, sales $2.81 billion versus $2.73 billion expected. Looks like EPS 34 cents. Not seeing the estimate on that here, but looks like Shopify's CFO says Q1 operating expenses guide of 41 to 42% of revenues reflects a 500 to 600 basis point improvement from Q1 of last year. That's pretty good. Looks like a lot of just buy ratings here, guys. Citigroup maintains buy on Shopify, raises price target to $175 per share. Wedbush raises price target to $140 from $125. Keeps outperform rating. And a lot of these firms, guys, have a positive rating. Looks like Deutsche Bank has a buy rating, up their price target to $150. RBC raises price target to $145 from $130. They also have an outperform rating. So, I mean, a lot of analysts are bullish. Shopify, no doubt. And this stock's been crushing it, man. I kind of regret not buying it a couple months ago, but obviously, hindsight is 2020. Who would have thought this would happen? I mean, we can't get greedy now, guys. We've hit a lot of winners. We've hit a lot of winners over the last couple of months, but hey, I wish Shopify was one of them. I'm not gonna lie, but it's not. It is what it is. But that doesn't mean there can't be more upside from here. It kind of looks like there will be more upside. We're already starting to break out of this ascending triangle. Who knows, man? This could be going a lot higher. And think about it. This stock a couple of years ago was at 175. The company's much stronger fundamentally now at this price than it was then. Who knows? Maybe it starts growing more towards that valuation where it was a couple of years ago. We'll see. Who knows? Either way, it looks pretty good on the 4-hour chart here. That Shopify SMCI is another one that we have to look at. Supermicro Computer, they reported earnings, and it looks like here, I think that was yesterday, they reported earnings per share adjusted of, where the heck is it, guys? Man, this has been rough today. 54 cents of earnings per share, it looks like. Where's the revenue at? Revenue. I'm not seeing it, but I can tell you here, the guidance. Wow, they gave guidance for, a couple years here. Hold on a second. So Q2 preliminary EPS, they see adjusted EPS of 58 to 60 cents, net sales of $5.6 to $5.7 billion. What's interesting here, guys, it looks like they see full year 25 revenue of $23.5 to $25 billion, and they gave full year 26 revenue. Wow, I haven't seen a company do that. I mean, obviously they project things out. Who knows if it's gonna, happen? I haven't. I mean, for SMCI, yeah, it's gonna be interesting. But yeah, Supermicro sees $40 billion of revenue for full year 26. Which is, wow, that's good growth from 25, right? So since earnings came out, guys, yesterday, it looks like the stock's been chopping around, which makes sense. And it climbed up already a lot heading into earnings, so maybe that's already, the guidance is already priced in. I mean, this thing was up 60% heading into earnings, and we do look decent on the 30-minute chart, but on the 4-hour chart, although we are getting a golden cross and we are above both moving averages now, we're not fully breaking out yet. I mean, we're starting to see signs of it, but not fully there. So keep your eyes on SMCI. I'm very curious to see how this plays out, as this stock has obviously been, the company has been under a microscope lately, right? So before we dive into the last two stocks here, make sure to join the email list here, guys. Shameless plug. It's free, and I send out my top stocks weekly, every week, literally, right to your email. That is linked down below. Put your first name and your email address. That's simple, guys, and boom, you're in there. And again, I send out my top stocks, and it's free. Make sure to join that, guys. So DoorDash. Let's take a look at DoorDash stock. It looks like they reported earnings. They were all yesterday, I'm pretty sure, all these ones, except for McDonald's. Either way, McDonald's or not McDonald's, geez, DoorDash. Maybe I should go DoorDash some McDonald's. Maybe that's what my subconscious is telling me here, guys. I don't know. Maybe not. What do you guys think? But DoorDash stock, they closed at 192 yesterday, popped to about 207. So it ran up 8% after earnings. And now it's kind of right back to roughly where it closed yesterday. We're up a little bit, but we're back under $200. And it looks like overall, guys, we're trying to find support at about 198 on this stock, which was resistance for the past week. It looks like now we're holding it as support, which is good news. And all these time frames, man, look pretty good, right? 1-hour chart. Looks like this could be a buy the dip opportunity. Obviously, do your own research. It looks decent, though, as a trade here, maintaining the uptrend. And we're noticing that on the 4-hour chart as well. So, yeah, DoorDash is doing well, man, clearly stock price-wise. And I'm assuming earnings were good as well. Looks like EPS came in line. Actually, wait, hold on. In line with the expectations, 33 cents. For EPS, revenue $2.51 billion, which missed the $2.84 billion. Wow, so a big miss in revenue, but it looks like total orders up 19% for Q4. That's pretty good. They got it for Q1 marketplace, GOV. What's GOV again? Crap, I forget what GOV is. Either way, marketplace. Gross ordering volume. That's what that's got to be. Yep, of 22.6 to 23 billion versus the 22.4 billion expected. So guidance was really good. Looks like they got it for gross bookings Q1 of $4.05 to $4.2 billion versus $4.24 billion. Okay, a little under there, but not bad, man. Reported monthly active customers, that topped 42 million in December versus the estimate of 40.8 million. So although they did miss sales, not the best sign. Their guidance was pretty good, and they beat on other metrics where the stock is actually overlooking the miss in sales. The stock's like, hey, we missed in sales, all right, but a lot of these other metrics are good. Guidance is pretty solid. The stock's moving up more. That's what we're getting. So not bad. I don't own DoorDash. I've never owned it. Quite frankly, I never use the product either. But funny thing is, actually, we did get $100. My wife and I, from a family member, we got an $100 DoorDash gift card recently. So I did use that. I used it once. But I don't know. I'm still kind of like I kind of like making my own food, and when I get food from outdoors, or not at the house, from a restaurant, if I get one from a spot in town, I just go pick it up. That's how I am. It's not even about the money, honestly. I just like doing that. I prefer to get my own food. I feel like it's more fresh when I get it instantly. Who knows what these DoorDash drivers, how long they take. What they're doing to the food. Not saying they're doing anything to the food, but that's just how my mind works. I don't know, man. Let me know what you guys think about that. Lyft is another one that just reported earnings, and the stock, it's been a roller coaster. We hit $15.50 a couple days ago, dumped to $12 this morning. Now we're back to almost $14, and we're recovering after earnings from yesterday, but the stock's still down 4.3%. Looks like they lowered. A lot of analysts here are lowering the price target. Looks like Lyft reported earnings per share of 6 cents versus the loss of a penny. That's adjusted or unadjusted? Wait, is that even right? Yeah, I guess that is. I mean, that's got to be it, right? Yeah. And they see Q1 gross bookings of $4.05 to $4.2 billion. Let's see here. What else? Sales, $1.6 billion. That beat the $1.56 billion expected. They see Q1 2025 gross bookings growth of 10 to 14%. Adjusted EBITDA of $90 to $95 million. All right. Yeah, I mean, not bad, but it looks like here it's just not enough to push the stock higher. I mean, I'm not a big fan of Lyft or Uber. I mean, Uber, I think, is a better stock, but I don't know. I think it is definitely a better stock than Lyft, but I don't know. I don't like these business models too much for me to invest in them, and just look at Lyft, man. Yeah, this stock is no comparison to Uber. I mean, Lyft hasn't gone anywhere in the last 3 years, whereas Uber, I'm pretty sure has been going up a lot. Yeah, look at that. Uber is actually a great stock. I mean, if you bought it a couple years ago, you're in great shape. Lyft, not so much. So I'm not a big fan of Lyft. The earnings were, not the best. And Uber, you guys see, they crushed earnings, and their stock's actually breaking out. We're breaking out of this wedge. So if I had to pick Uber or Lyft, I'm going Uber. But yeah, keep your eyes on all of these companies, and I'll do a bunch more videos today, guys. Make sure to subscribe. Again, I appreciate all of you for subscribing. We just hit 50K, which is nuts. I really do appreciate that, guys. And before you click off the video, get your 30 stocks from Moomoo. Open up your account using that link down below. Deposit at least $100. You get 5 free stocks, guys, right off the bat. And deposit at least $2,000, you get 25 more stocks, totaling 30 free stocks. It's nuts, guys. So use that link down below or go to stocksurfest.com/Moomoo. And with that being said, cheers. I'll catch you guys in the next video.